Hello, everyone, and thank you for joining us today for our Dynamics GP Coffee Break Fixed Assets. My name is Tess, and I'm the facilitator today. If you have any questions during the presentation, please type them into the questions area in the control panel on the right-hand side of your screen, and we'll answer questions at the end. The session will be recorded and posted on our blog, as well as shared with you later this week. Now I would like to introduce our presenter, Don McNulty, who is a solutions architect on our Dynamics GP team at Encore. Don, I'll pass it over to you.
Thanks, Tess. So good morning, everyone. So today we're going to talk about fixed assets. So the agenda is basically pretty straightforward. It's how do we classify and track the asset in GP? What types of amortization can we use? Introduction to AP POP. So it's how do you link your accounts payable side where you're purchasing your asset into your actual asset? And then, of course, what entries are recorded in the general ledger. It's a fairly straightforward product. It's attached. So what we've got is underneath the asset cards, we have classification and tracking. We have an asset type, we have a location, we have a sublocation, we have a custodian. We have a lot of information on each and every one of the items attached to that. As we put through the classes and things like that, that drives general ledger accounts. We need 6 or 8 different GL codes, and I'll be showing those later on. Also attached to each asset, we have a book card. That book card does things like set the depreciation or amortization type, the in-service date, the life of the asset, the net book value, salvage values, and other things like ITCs and some other issues for that can be done. We can also add additional information in there based on what's required for you to track this. This is the screen that we'll talk about in a little more detail later on, but it is the one that drives the depreciation and drives the general ledger entries. Then we'll talk a little bit about the reporting. SSRS has a very good built-in continuity report for fixed assets. There's also fixed asset reports inside GP as well. So you can get your net book values and things like that out so that you've got something to balance to on your asset cards. Integration. So on the integration side, we have 2 integrations that can occur, and I'll show both of those today. One comes from accounts payable, straight vouchers. We put the voucher in, we put it through a clearing account, and what that clearing account does is that allows you to drive your asset into a place where you can then take the time to take that out of the voucher and put it into an asset. One of the challenges that people face is that if I go and buy 5 computers, I'm going to get 1 invoice for those 5 computers. I'm going to list them as 5 separate assets, but I'm only going to have 1 invoice. You need to be able to attach that same invoice to multiple assets. Integration to POP, you can also use purchase order processing. There's a flag that drives it on the item card or on the item detail on the purchase order, and you can then flag that to go through to the fixed assets. You change the GL code to the fixed asset clearing account. You select it as a capital item, and then that item will then show up on the list, and you can then attach a single line from a purchase order to an asset. So if I'm buying a computer or a computer and a monitor and a docking station, those 3 pieces, those 3 items would then show as 3 separate line items on my purchase order, and I'd have 3 separate lines in my fixed asset clearing so that I would be able to attach each of the individual lines to the actual asset. This makes tracking back and finding the actual invoice for the auditors much, much easier to do. So we're also going to talk a little, I'm going to show you some of the journal entries that come out of this. So basically what it does is it does 3 separate journal entries. One entry is for the purchase of the asset. So when we purchase it with AP, we're debiting fixed asset clearing and we're crediting accounts payable. That's done in accounts payable, but then when we pop into fixed assets, when we register the asset as an asset, it will then debit fixed asset, it will credit fixed asset clearing, and it will debit the fixed asset control account. Furniture, fixture, and equipment, computer equipment, cars, whatever it happens to be, automotive, whatever. It then, on a second thing that it does is that on a monthly basis, it will calculate the depreciation that's required to bring the depreciation of the asset up to the current information. So that gets done on a monthly basis, so you get a monthly depreciation. That monthly depreciation can be done by period, i.e. by month, or by day. By day would allow you to then use 28 days in February would get you less depreciation than 31 days in March. The last thing that it does is disposal. So when an asset is disposed of, this is not when it's fully depreciated, it stops depreciation, and the accumulated is equal to the accumulated amortization is equal to the asset value. But when I sell the product or dispose of it because it got lost or stolen or whatever it is, I need to get rid of that particular asset. When I get rid of that asset off my list, it will reverse out the cost, reverse out the accumulated depreciation, take whatever cash value you got for it if you sold it, or zero if the case when you threw it out. It would then recognize a gain and loss on foreign exchange, gain and loss on the fixed assets. So without any more, what I'm going to do is I'm going to pop over and do my and show you what this looks like inside GP. So inside Great Plains, underneath your financial area, you have a large number of things. It shows underneath your financial as fixed assets. We have them under inquiries, and we have a few transactions as well as setups. So when we look at a general asset inside here, we can create a new asset inside here, and we can push through. As we push them through, we can then attach the acquisition cost and things like that and create the asset. So when I bring up my asset, and just bring up like so, it's a desk. This one here I have attached to this particular one here. This was an asset that came through here. If I click on this voucher receipt, it will actually drill down and show me that it came on a shipment invoice from Advance office. So this is who bought it. I got one shipped. I did create a purchase order for 2 desks. So, and I have, if I go to my line item number here, it's a capital item. So it's ready. It comes in through here. So that's how we attached it through here. So inside here, I keep track of a physical location. And in their particular case, they have a physical location of boardroom 2, room 100 in Atlanta. It's building the Atlanta as well, which is a physical location. There's a physical location inside the building, plus where the physical is. The structure, what structure you wish to have, you can put this to an admin or accounting, that's the department. And I can also attach it, if I wanted to any one of my employees in my employee cards, so that I could say, oh, this is a cell phone, I've given it to Joe, and at the end of the day, you could say, okay, what does Joe have? And you can get a report that shows that particular information. Under the manufacturer, you can put in a manufacturer. I've put in office.com. You can put in a serial number. My desk does not have a serial number, but it could have a model. It could have executive desk. Like so, and it might have a warranty of 2028, 12/31/2028. I'm running in 2027, so this would be good for a year and a half, and we can go okay. And that would then allow me to push out a report on the warranties. So that's basically what it looks like from there. When I go to my booking side here, I can then bring up my book account. This is the same information. This is the depreciation page. What book do I want? I can have as many as I want. I can have a minimum tax. I can have a federal versus provincial, or federal versus state. I can also have an internal. Now I've used the internal one. The internal one is the one that actually books against the general ledger. Only one book can book against your general ledger. So we place it in service as of today. It's been depreciated up to and including the end of last month, so we don't have anything there. I put a salvage value of $400 on a $1,000 desk, and it's good for 5 years. You notice that I put in my original life of 5 years. When I do that, that means I have $600, so I would expect $600, $10 a month would give me the $6,000. When I click on my arrow key beside my yearly depreciation, I can see my periodic depreciation rate is $10 a month. And my daily depreciation is 32.73 cents per day. So I could do it by day or by month. So you know, okay. If I'm making changes to any of these things, it will ask me to recalculate and go from there. The depreciation methods are listed here. We have straight line, original life, remaining life. We can change things like that to bring some no depreciation, declining balance. If we use a declining balance, we have to fill in the percentage side over here. And that would then do the 20% declining balance or 30% declining balance to match the CCA, say in Canada or in the US against any depreciable assets. Down here, you can mark it whether it's a luxury automobile. These two, luxury van and tax and things like that, and the ITC costs are American based, not Canadian, but they do work very well from that point of view. So that's your book value, and it gives you the information that you need underneath your book. Other screens you have an insurance screen, and this allows me to insure this particular piece. I can say 2027, it's insured. What's my insurance value? I'm going to insure it for $1,500 because I think I've got a good deal on it. The replacement cost is $1,500, and then reproduction and things like that. So I can add this information. I can then run reports that will then give me an insurance value report for my fixed assets that I have on my books. This is good so that we can keep track of what we should be putting on our insurance pieces, especially for older assets that may have appreciated significantly in value, and you need to insure more than what they actually cost. Other things that we can do inside here, if there was a lease, and then there's some user data. Now I've got a number of user fields here. I can rename all of these if I wish. I am not going to. I haven't inside my setup, but I could have done so. So once I've got that, my asset is now in place. Okay. So let's go save, and we'll close this. So what I'm going to do now is I'm going to quickly go into my purchase order inside here, and I have a PO outstanding already, so I don't have to keep this in. There's my two desks. And when I go to my item, so inside here, I'm going to look at this. I'm going to take a quick look at the accountants, make sure FA cleared, there it is. And you'll notice that there's a capital item button here. When I've got this turned on for receipts, this is going to go to the capital item. So that's fine. Everything else is fine, and I hit save. And then what I'm going to do here is I'm going to go actions, and I'm going to receive the PO. Seems like a reasonable thing to do. I'm going to receive the one. I've already received one. As you saw, I just had it in there. There's my desk. I'm going to receive one, and I'm going to go receive. So there it is there. It's ready to go. When I look at my distributions, you'll see that it is putting the accrual to 2111, and it's putting the $1,590 into fixed asset clearing. So I go, okay. So I'm good with this. I can hit post. I'm going to close that, and then I'm going to close this. And the other thing I'm going to do is I'm also going to put in a voucher so that we can see the other type, the accounts payable integration as well. And we'll go to advanced as well. Document number. And we're going to put in $2,000 for this one. And my distributions, I'll go into here, and I'm going to change this to like so. So there it is there. And then on my distribution side inside here, I can say stand up desk. We go, okay. And we'll just put it in there so we know what it is. And we go post. And again, I'll just close that. This is just standard accounts payable transactions that we've done. We've put them through the fixed asset clearing. So now when I go into my financial inside here and I go back to my cards, which we just discussed, and I go into general, you'll see that I have a new button at the top called purchases. So inside here, I can grab either of these. I can grab the 1000, automatically brings in the office desk for this. I'm going to put it in a class. I'm going to put it in the furniture, fixture, and equipment, and I'm going to give it 2026. You can have it auto number if you wish. And then from here, I can pop down to my physical location. I'm going to put this in board unit number 2. It automatically fills in Atlanta for me. And underneath my structure, I'm going to give this to sales instead of to accounting. And I'm not going to assign it. In here, this is office.com. Again, quantity 1, last maintenance, and now I'm going to go into my book account. So there it is there. We go to fix. Oops. My apologies. I forgot to say it on this. There it is there. I'm going to put it into internal, and it automatically fills in 7 years because that's what was on the class. I can change that easily to 05 for 5 years. I can also put in days if I need to. I'm going to put in no salvage value, and like so. We'll just leave it like this, and we'll hit save. And yes, I know I changed my depreciation, reset the lifetime. There's the $150, and when I go like this, it's $16.66 a month because it has no salvage value. So there it is there, 54 cents a day. So that's what we need. We hit save. And now we've set up that asset. Now when I go back to my purchases and I hit save, and I go clear, when I pick up my purchases here, I can see the $2,000 asset, and I would go through and I would empty out the fixed asset clearing account. I'm going to leave this one for the time being. And we'll close this. So then what would happen is that we would come to the end of the month and we go, we need to get that posting across. We're not going to do a depreciation at this time. We're going to go period from 2027-004 to 2027-004. We go insert. And let me just grab my own. I'm just going to grab the single asset. Like so. I'm just going to pick those. We hit process. There it is there. You'll see that it's taking the money out, putting it in there, and we go post. And I'll put it to the screen so you can take a look. And there it is, and it's now been moved into furniture, fixture, and equipment. So I've got that done. And if I was to go into my general ledger here, at this point here, there it is there. So I've got my 1500 coming to 1590, and if I look at my receiving document, you'll see that I got the 1590 for the credit and the debit, so that's offset to go to 0. So if I posted both of these, the 1590 would be 0. So then what happens is I come into here and I want to depreciate a single asset. And you, of course, would do them all at once. We put the internal depreciation target date is going to be 04/30/2027. So I'm going to depreciate 1 month. And I'm going to hit depreciate. And it's done. So now when I go back to my geo posting, and again, I'll pick the asset. Otherwise, it kicks everything. Hit process. There we are there. There's my $16.67 that depreciates the asset. So then I can post this. And again, I can put it to the screen. Go OK. Close that. And there's my $16.67 for my depreciation. Step 2. Third step would be I would go into my fixed assets underneath my transactions and I would dispose of an asset. I could then retire an asset. And when I retire the asset, 26, retirement date 05/31/27. I'll put it to the next month. Retirement type is sale. Retirement code is sold. And so now what we want to do is we go cost, cash proceeds. Cash proceeds, I got $400. bill expenses for the sale, and we go retire. And when I retire it, I can then go back to my general ledger. Make sure I change the period because I've depreciated it. We go insert, and again, I'm going to pick up my asset. So it would then generate the information. It seems to have managed to pile up on me. That's okay. Let me just go delete. So when we do these fixed assets and things like that, what we have is we have a group of accounts. And the accounts themselves are set at the account group. And my account group is furniture, fixture, and equipment. So there it is there. So there's the depreciation expense and the depreciation reserve, the accumulated amortizations. Prior year, if you make a change to the asset on the value, you can make it do a prior period adjustment for you if you wish. It'll push it through to here. The asset cost itself goes to $1,500. Proceed, the cash, the $400 would have gone to $1,190, and then the recognized gain and loss on fixed assets would be $8,030. And then, of course, the clearing account at play. Now, reporting-wise, we have a large number of reports inside here. We can click on fixed assets, activity, comparison, depreciation. So inside here, we can see the depreciation and things like that. So we can project depreciation. Now, one of the things that I will quickly show is when I go to my routines and I do a projection, I'm going to project all assets, go like this and go project. Oh, target date, 2027-12/31. Oops, 12/31/2027. Projection. Yeah. Runs through all my assets and does a projection into the future. I can close this, and then I can go to my reports and I can hit projection. And I'll take a period projection in detail. And we'll modify this, make sure I've got this correct. I've got everything in here, 20 from March through to here, and we go destination, it's not. It goes to there, and we go print. So there's your office desk number one. These are what is going to be done each period. And if I go to the very bottom, I have number 25. Projection grand total is $90, which is the 10 times 9. There's only one per month. There's only 9 months. So therefore, it's only going to be $90. And as I move up through here, it has $11.90 in. You'll notice that the last one of the period gives you the rounding so that it rounds it properly to exactly the amount. So if there's any rounding issues, it shows up in the December or in the final period of your year. Okay. Other things that we have is we have under reporting services, we have a continuity report, which I mentioned before, which is very nice. Gives you your things like that. But Tess, how am I doing for time?
Good, Don. We do have a few questions that have come in if you are ready for that before we go back to the slides.
Let me go back to the slide here.
Might want to stay in GP.
I'll just stay in GP. Okay.
Yeah. So the first question is there only one fixed asset clearing account?
No, the fixed asset clearing account is set by the class. So you can have different ones. So as you put in your account groups, you set your fixed asset clearing. So my computer fixed asset clearing, now in my particular case, they're all set to 1590, but you could set a different one for each account group. So you could have one for computer equipment, you could have one for desks and office equipment, you could have one for automobiles, for instance.
Sounds good, thank you. The next question is, if you use a different GL account for work in process over a couple of years, how do you eventually capitalize that cost into separate fixed assets?
If you do a project, so for instance, you're building a server room or you're renovating the floor of a hotel, and you've got, large numbers of invoices and things like that coming in. What most people do is they push them through to a WIP account, like you said, like a work in progress. And once the asset is completed, you then move those assets in, and you do a journal entry to remove the amount from the WIP account and put it into the fixed asset clearing account as a single entry, or in as many entries as you require for the asset. So if I'm building a server room, I may say, okay, I've got, I'm going to list all 15 computers separately, but the racks and the wiring and all of that might be 30 invoices, but I'm going to put them in as a single asset, as a leasehold. So it might be because they're in the wall. So you put in wiring, so you put them in the wall. So that would then become a single asset. It's a matter of how many assets you wish to do. And on a server, am I keeping track for IFRS purposes? Am I keeping track of hard drives versus motherboards? Because motherboards last longer than hard drives. They have a different depreciation rate potentially. So these are questions that you would have to answer yourself. When you do that, you do, however, lose the ability to put the voucher directly on the asset. So when I look at the asset on the acquisition cost, it is no longer there. So if I go into my general here and I bring up this, when I go to acquisition cost here, I would not be able to, I can type anything that I wish inside here. I could add an additional line inside here, and I can say chair pad. And I can add additional pieces of information inside here from the acquisition. I could add additional costs inside here as well if I wish. Inside here, I can attach a different vendor manually, so I can go Ace Travel. And then I can't link a receipt because I don't have one, but I can also put in a currency, and then I can put in a document number and things like that. So I can put in a document number inside here. So I can go 1, 2, 3, 4, 5, 6, like so. And if I've got a PO number, I can put a PO number in there. So I can key this manually, and you could fill in a bunch of things from your WIP if you wish. That would be up to you as to whether you wanted it in the fixed assets or whether you would just leave it in the WIP and have the people go back to the WIP account. Okay? Thanks, Tess. Anything else?
Thanks, Don. One more, yeah. At the top of the asset card window, there's a purchases field dropdown. Do the contents of this dropdown tie in with the asset clearing account?
Yes, they do. This list here is the same as this list here. It just gives you more information so you can see them, and you can select multiple ones if necessary. So it might be that you've got, I bought a workstation for a computer, so I got three separate invoices. I bought the monitor at Best Buy, I bought the computer from HP Direct, and I bought the docking station at Future Shop. So all three of those would be three separate invoices to three separate vendors. I may put them all together and call it a workstation as a single asset. So I would want the ability to come up to my purchase here and select multiple invoices. That would then, inside my acquisition here, would then add all three as one and then give me a total acquisition cost of the three combined together. Okay?
Thanks, Don.
All right.
Do you want to go back to the slides?
Let me pop back.
So as Don is navigating back to the slides, we do have 2 upcoming coffee breaks in January and February. So I put our events page link into the chat area if you'd like to register for either of those.
And we got one on general ledger close on January 24th, and we have one on how to do a bank rec on February 14th.
That's great. And thank you everyone for joining us today. And thank you, Dawn, for sharing that information today. Have a great rest of your day.
Thanks all.